Hello traders and happy Friday. Being a Friday and the first Friday of the month of September means it is US Payrolls Day. So non-farm payrolls in the US comes out tonight. And look, this payrolls number certainly is going to be a very, very important number and closely watched by the market for a simple reason is that the last non-farm payrolls number that we had at the beginning of August, the revisions, the 2-month revisions that we got as part of that number last time, those revisions were record revisions, negative revisions of minus 250,000 jobs. And it was from that moment onwards that the market priced in that the Fed has to start cutting rates and has priced in a September rate cut of almost 100% now. And obviously, recently we had Powell at Jackson Hole, who also opened the door and aligned with the market, that they're ready to start cutting rates. So tonight's number, why is it important? Well, it's because we need to see some confirmation that the labour market is actually weakening and that obviously those cuts are warranted. So what are we expecting tonight? So we're expecting tonight for the headline number to come out around about 75,000 and the unemployment rate to go from 4.2% to 4.3%. So look, if the number data came out tonight as expected, I think that's probably going to be the most market-friendly outcome because I think it's not really going to trouble the market too much in their pricing of that September rate cut. For the simple reason is that yes, the unemployment rate, marginally going up to 4.3% is showing some slowing in the labour market. But there's no big red flags that it's falling rapidly. So yes, that would be more market-friendly. Okay, now if the number came out, below expectations, so we get, say, for example, the unemployment rate jumps up to, say, 4.4%, and that also maybe that the headline number comes out sub, say, 50,000. An outcome like that, I think the market is certainly going to start thinking that the Fed is too slow in their rate cuts and potentially that they need to actually cut by 50 basis points. So that certainly would start to get a bit of volatility in the market. We'd see US bond yields drop like rocks, and no doubt on the back of that, we're going to see a lot of US dollar selling. Now, that sort of outcome generally is a positive for equities, but if the market is shocked thinking that the US economy and the labour market is actually now rolling over fast, that may be a negative and see equities which are actually going into this number at record highs. So they may not like a number coming out well below expectations and a Fed behind the curve. And the other outcome is if the data comes out above expectations. So there we're looking for the unemployment rate to say at the same level, say at 4.2%, so it does not go up. And also that, say, the headline number comes out, say above 120,000 or something like that. If that did happen, then obviously the market's going to be super confused. But one thing is that they're going to start thinking, okay, maybe that number in August was a one-off. Labour market is still fine. So maybe we don't need those rate cuts in September. So that would also set off a lot of volatility. You'd probably see bond yields then spiking aggressively. At the moment, we've got US 2 yields at around about 4.15%, which is multi-year lows going into the number, and also 10-year yields below 4.2%, multi-month lows. So those yields would be spiking back up, and obviously that would be a big positive for the US dollar. The US dollar would be flying on an outcome like that, and I think that equities also would not like that result, and then potentially they're obviously not going to get their rate cut, so to see equities get hit quite hard. But I would assign a lower probability for an outcome above expectations. Last night we did get the private payrolls report, the ADP, and that came out, the headline there, weaker than expected, only around about 55,000 jobs added. So lower than what's tonight they're expecting at 75,000. But the ADP has not been, it used to be a very good precursor to payrolls, not so much recently, but regardless, last night it did show weakness, and probably the higher probability is that we'll probably come out around expectations, maybe just a touch marginally lower, so maybe the more market-friendly outcome. Regardless, look, anything that has happened this week in markets really doesn't mean too much. For the simple fact is that this number tonight can change everything in an instant. So the best way to obviously trade this number is just watch what bond yields do, watch what US 2 years, 10 years do. If they're spiking up or spiking down on that number, that certainly is your cue for lots of different trades in the market, and no doubt 100% you are going to see some volatility tonight regardless. So look, good luck and have a great weekend. We'll catch back in with you next week.